Good morning everyone and welcome to Morning Markets. My name's Chris Leyland and I'm Director of Investment Strategy here at True Potential. So firstly, let's just have a look at what happened yesterday and we'll look at equity markets. And actually equity markets were generally positive yesterday. You saw the UK finish up around about 0.6% and you saw the US finish up just under 1%. So if we look at the US now, you've actually had 4 consecutive days of gains. So these are some of the strongest gains that have been seen since 2020. In after hours trading, and I'm sure you will have seen this, anyone who's read the news this morning, basically what you saw is the Facebook parent, so Meta, lose double-digit returns in after hours in the futures trading. Why is that? It's because investors were becoming a little bit nervous around the results that Meta posted overall. Now, if we think about what's been happening with the more technology-focused stocks, they've actually been pretty challenged in January, and that's because investors are shifting their preference away from stocks that benefit from that low interest rate environment. But look, what I want to concentrate on today is the oil price. And I'm sure anyone who drives a car will be very, very familiar with the fact that the oil price has significantly moved upwards. What you've seen now is actually the oil price went through a 7-year high earlier this week for WTI. Now, what's happening? You've really got 2 things. You've got supply and demand dynamics. So what you have is really strong demand, and that's really coming out of the pandemic recovery overall. But as well as that, you've also got very tight supply. So what happened yesterday? So you had OPEC Plus. So they came out and they said that they will stick to the 400,000 barrels per day for their oil output. And what's interesting about that is actually the group is actually struggling to meet those targets overall. But why is that? Why is the supply constrained? It's constrained, so the group has blamed surging prices on the failure of consuming nations to ensure adequate investment in fossil fuels as they shift to greener energy. And you've also seen some of the OPEC Plus sources saying that the Russia-US tensions are leading to some tightness in supply overall. But really, what's our view? You know, the reality is that the oil price is high, and the reality is there's good reason for that. And it's because of those supply and demand dynamics that I've just talked about. But what do we see moving forward? I think in the short term, the reality is that the oil price will stay high. What you're seeing is those supply and demand dynamics still in place overall. So for us, we see the oil price continue to be high as we move forward over the next few months. Just on today, quite a lot going on today actually. So you've got the ECB with their interest rate decision, and you've also got the Bank of England with their interest rate decision as well, with the forecast that the Bank of England will raise rates from 0.25% up to 0.5% overall. And please watch tomorrow's Morning Markets where George Bell will talk you through what happened with those interest rate decisions. Just before I go, I hope you don't mind, but I'm just going to plug our Do More With Your Money show. So you've got the True Potential CEO, Mr. Daniel Harrison, and you've also got my boss, the CIO of True Potential, Mr. Jeff Casson on there. So please tune in and watch that. Thank you very much. I look forward to speaking to you soon. Thank you.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.